This week, one of the semiconductor industry's most critical companies saw its stock dip, even as it continued a program to buy back its own shares. The company is a near monopoly in the technology needed for the most advanced computer chips, but its valuation is drawing scrutiny. Is the stock simply taking a breath after a massive run-up, or are there deeper concerns for investors? We'll look at the latest developments for ASML. Welcome to Ticker Watch News for ASML Week 10, 2026. This episode covers the key news and market developments for the Dutch semiconductor equipment giant, exploring the headlines and what they might mean for the company's path forward. Stock Snapshot. During the first week of March, ASML stock saw some downward pressure. The week started with shares trading around €1,206 on March 2nd, but ended at approximately €1,154 on March 6th, marking a decline of over 4%. The dip on Friday was reportedly linked to investor concerns about demand uncertainty and ongoing geopolitical pressures affecting the semiconductor equipment sector. This weekly performance trailed the broader S&P 500 index. The company was active in the market, repurchasing its own shares throughout the week as part of a previously announced buyback program. Top news and headlines. Several key developments shaped the narrative for ASML this week. First, the company reported transactions under its current share buyback program. Between March 2nd and March 6th, ASML repurchased over 105,000 of its own shares, spending a total of approximately €125 million. This is part of a larger program announced in January 2026. Second, the company published the agenda for its upcoming annual general meeting, scheduled for April 22, 2026. The agenda includes several significant leadership changes. The supervisory board intends to appoint Marco Peters as the new Chief Technology Officer. It also proposes the reappointment of the Chief Financial Officer and Chief Operations Officer. In the supervisory board, one member, Alexander Everk, will step down, while two current members are nominated for reappointment. A new member, Benjamin Lowe, former CEO of ASM International, has also been nominated for appointment. Third, a major strategic theme emerging from company and media reports is ASML's plan to expand beyond its core EUV lithography business. The company's chief technology officer, Marco Peters, stated that ASML is looking 10 to 15 years ahead and exploring new directions, including tools for advanced packaging. This process, which involves connecting multiple specialized chips together, is critical for building next-generation AI chips, having already shipped its first advanced packaging lithography system in late 2025. This move signals a push to capture more of the booming AI chip market. Finally, the company continues its international expansion efforts. Reports noted that ASML plans to open a support office in India, aiming to support that country's efforts to build out its domestic semiconductor manufacturing industry. Market reaction and investor sentiment. Investor sentiment around ASML appears mixed, largely due to its high valuation. One report from March 9th highlighted that the stock carries a Zacks rank number 3, hold, with its premium valuation potentially limiting upside in the near term. Other analyses from Simply Wall Street have described the shares as trading significantly above their estimated fair value. This suggests that while ASML's technological leadership is undisputed, some investors are becoming cautious about the price. Adding to this cautious tone, one report flagged the risk of significant insider selling over the past 3 months. Technical and fundamental check-in. From a fundamental perspective, ASML's position remains strong. The company holds a near monopoly in the extreme ultraviolet or EUV technology required for the world's most advanced chips. In 2025, this EUV business grew to contribute 48% of net system sales, up from 38% the prior year, showing a clear shift from older DUV technology. Demand from both logic and memory chip makers, driven by AI data centers, fueled a 12.4% increase in net system sales in 2025. The company ended that year with a backlog of €38.8 billion, which provides strong revenue visibility. Looking ahead, the consensus earnings estimate for 2026 points to a 21% year-over-year improvement. However, the stock is trading at a high price-to-earnings ratio of nearly 37, a significant premium compared to the broader technology sector. What to watch next week? Looking ahead, a key catalyst on the horizon is the annual general meeting on April 22, 2026, where shareholders will vote on the proposed changes to the Board of Management and Supervisory Board. These leadership appointments will be critical for guiding the company's long-term strategy, particularly its expansion into new areas like advanced packaging. From a market perspective, the bull case for ASML hinges on continued strong AI-driven demand and the successful adoption of its next-generation high-NA EUV systems. The massive order backlog supports this view. The bear case centers on the stock's rich valuation, which may already price in much of this future growth, alongside risks from geopolitical tensions and potential export controls. A base case scenario could see the company executing well on its orders, but the stock price moving sideways as the market digests its current premium. Thank you for tuning in to Ticker Watch. This podcast is for educational purposes only and does not constitute financial advice. Be sure to subscribe, leave a review, and share this episode to stay updated on the companies shaping our world.